All right, it's exactly 2 p.m. So let's get this started. Again, welcome everybody. My name is Nick from Me27, and I would like to welcome you to the Meet the BC series. We started the webinar to facilitate a little bit more learning and development of startups community in Southeast Asia, and the Meet the BC series is aimed to help you understand a little bit more about the VCs in our ecosystem and understand how each of them look at opportunities and investments. This is one of our things I want to share. If you want to get access to investor network and deeper insights on what's happening in the region, welcome to the webinar, and please check out our membership program. The program is designed to help you grow your startup, and we are focused on investor startup matchmaking activities. If you are fundraising or looking to fundraise in the near future, the membership will also help you get connected to the right investors. So please check out our membership program at the website. If you have any questions, please feel free to reach out to us. And yeah, so coming back to today's session, with me I have Joe Zhang from TNB Aura. Hi, Joe.
How are you? Hi, Nicholas. Yeah, I'm good. Hi, everyone. Thanks for joining this session.
Yeah, thanks again for doing this with us. We just want you and the audience to know that this session will be recorded, and we will be sharing this video on our YouTube channel. It will be shared on our Facebook as well, and we will share it with the article that we're going to publish after the webinar.
Okay, sure.
Yes, so without further ado, let's get to know Joe and TNB Aura better. Joe, why don't you start off with a very simple introduction of yourself?
Sure. Yeah, of course. So I'm currently the principal of our firm, TNB Aura. And a bit of background for me is I was born in China and I came to Singapore 17 years ago. Spent more than half of my life in Singapore, studied here, work here. So I had my engineering degree from NUS, then started my career in energy industry. Basically doing project management and engineering designs. Then after that, I kind of ventured into venture building and also tech consulting. And during the time, I also did my MBA at NUS as well. And after that, I went to work on for this firm called Fosun RT Capital, which is a CVC arm of a conglomerate of China, Fosun Group. So I was with their Southeast Asia team, basically looking at Series B and later stage companies, all the way to public equities. So after about 1 to 2 years with them, I realized actually for Southeast Asia, the opportunities lies in earlier stage. So I went on to look for another opportunity with a firm who invests in earlier stage, Series A and B stage. So that's why I came across TNB Aura. And after I met the founders and the partners, there's a good chemistry and a good fit with the team. Therefore, I joined my current firm, TNB Aura. So that's a quick background about myself. If you go to link here, you can see all my profile there.
All right, perfect. So let's just get straight into it, all right? So TNB Aura, you've been with TNB Aura for a while. I think the audience would like to know, could you share a little bit on what the investment philosophy is and, what's the motivation to launch this venture fund?
Sure. I think for TNB Aura, right? We are a VC firm based in Singapore, and we do investment across Southeast Asia. And we look at startups who actually bring in transformative technology to this part of the region. Mm-hmm. And actually, we have a very strong geographical mandate that for Southeast Asia region. We don't do any investment outside of the region. Stage-wise, we focus on Series A and B stage investments. Ticket size-wise, we actually invest in 1 to 5 mil for the first ticket and up to 10 mil through follow-on rounds per investee company. To give you guys a bit of history about TNB Aura, so our fund was set up at the end of 2017. And we had our final close at the end of 2018. So most of our investment actually happened during the last 12 to 18 months. So when my partners and the co-founders set up the firm, so basically they were looking at a few big opportunities that's coming up in Singapore and also in the region, which are like artificial intelligence, B2B SaaS, and also consumer tech. And over the time, we actually realized there are opportunities in B2B sector. However, there's a bigger potential in consumer sector. So if you look at our current portfolio mix, it's kind of a good balance of 50% in B2B business and 50% into B2C business. I think that's kind of a unique portfolio composition across the region.
Okay. Yeah, so I think you did share a little bit of the average funding amount, ticket size, right? It was between 1 to 5 mil per startup, right? Could you elaborate a little bit more about your current funds? Maybe perhaps in detail, what is the fund is currently looking for? Yeah.
Sure. I think the question is also related to our kind of investment methodology. So basically, we are at the tail end of our first fund, and we are actually launching our second fund, which is a large bigger fund. And we actually see ourselves as an industry agnostic investor. We actually look at all industries. However, we have a top-down investment methodology in-house. And we do have a few key focused industry and sectors. For example, e-commerce. However, for e-commerce, it's not the existing marketplace model. We tend to look at more subsectors, to call it. For example, social e-commerce or vertical e-commerce, or anything to do with direct-to-consumer retail. That's one of the big bucket we are focusing on. And we are also quite interested in logistics. Because I think logistics is one of the key infrastructure for the general e-commerce ecosystem, and that's why we think that there's also a big potential there. And we also tend to look at more into edtech. Unfortunately, I think edtech, there are only a few notable names in the region. However, it's still a huge market. That's why we are actually actively looking into edtech space as well.
EdTech as in education tech or advertising?
Yes, education tech.
Okay, yeah, I just wanted to clarify that. Yeah. Okay, you did mention earlier that you guys raising a new fund soon, right? Is there any, you shared a little bit of the sectors that you guys were interested in. Aside from those, is there anything special that you want to share with our audience, what about this new fund that is coming up soon?
Sure, of course. So the new fund that we are launching actually is just another extension in many ways of our first fund. So we still follow the same kind of top-down methodology, and also we still maintain our high conviction approach. I think this is also something different from other VCs in the region. So we tend to only invest about 10 to 15 companies per fund. So why we want to do that is because we want to spend as much time as possible with each portfolio company and try to give them as much help as possible along the way. This is quite different from many other funds in the region who invest like 50 to 100 startups. Of course, I think they are also working very hard, but we think we can't be Superman. So we can't spend our time to have in-depth value add to each to 50 or 100 portfolio per fund. So that's why we chose an approach that we just focus our energy and effort on very selected portfolio companies. I think 10 to 15 is a good number for us.
Okay. 10 to 15 as in you've invested in 10 to 15 or you're looking to invest in 10 to 15 more companies?
It's 10 to 15 companies per fund.
Okay.
Yeah.
All right. So yeah, so talking about investment, right? For TNB Aura, what are some of the qualities that you look in a founder, right, or potential investment?
Sure. I think it's a good question. This is a question that you should ask any VCs that are coming onto this platform, right? Of course, we actually making investment into startup is a very complicated process, and it's a decision based on a lot of a combination of many factors. But we tend to look at a few factors more than others. For example, I think most importantly, you also mentioned, Nicholas, is the founder, right? Because at the end of the day, we are basically investing into the founders. We put trust into the founders, whether they can grow the company according to their plan, their vision, whether they can execute it according to their promise. I think in the end, founder is the most important factor for any startup, for sure. Even regardless of the stage of the company. So founder is definitely a top criteria we look at. I think since founder is so important, I actually want to share a bit more how I personally look at what kind of founders we want to back. So this is my personal preference. I may not represent our fund. When I look at founders, right, I tend to like the founders who have in-depth industry knowledge or sector knowledge into the startup they are building. So I actually like the logic of founders, like how they start the company by they actually seen the problems and they realize the pain point and the gap in the market, and then they went down and try to build a solution to solve that pain point. And the pain point should be big enough, into like billions of dollar potential. Then after that, they can kind of in the process of building up a solution, they can refer to other markets for successful examples. But they shouldn't just copy paste of other unicorn models to Southeast Asia, particularly because the micro economics and the infrastructure, the demographic is completely different. So that's kind of the logic behind the business model, like the logical thinking behind the founders I'm looking for. And second thing is I actually like founder who has a big dream and long-term vision and is ready to disrupt the current system. However, at the same time, have a very practical approach to the problem and has a clear plan. So I think if the founder has such a good combination, it will be a topic for me.
Okay. So you shared your views on founders, right? What about from a startup perspective, right? From a team or a product or a market perspective, right? So maybe you can share your, prioritization. Which one is the most important first? Like the second most important? Yeah.
Yeah, sure. I think as a follow on to my previous answer, I think for the team, actually I prefer the team who has expertise, a combination of expertise who compensate each other, like who can fill up the gap for each other. Like nobody is perfect, like no single person can run a startup by himself. So the team should have like good chemistry. So typically when we look at the team, it's also quite interesting. We look at team, we always ask the question like whether how long did they know each other, meet each other, whether they worked with each other before. I think like especially between the management team, it's very important that they are able to work with each other, and when they face problem, they have a way to work around and find a solution rather than getting into conflict. I think that's quite important. Other than founder or the team, we also look at the market size, right? Market size is quite important. It's not saying that the current business model, especially for early stage startup, they can capture the entire market. But however, a bigger market size means they can grow to comfortably to a certain size before they face intensive competition from incumbent player, from other startups. They also, because I think the first 1 or 2 years of any startup is quite important for them to complete the product market fit, to basically acquire the first group of customer. Actually, those customers may be the most valuable customer they can acquire throughout their life, and also build up certain defensibility over other people. But I think about it, if the market size is very small, for example, it's 100 million market size, and your company may grow to 10 million, and you're already 10% of the market share, you may already face quite intensive competition from other guys. And before you build up your competitive advantage, right? That's also important. I think third thing for me is the unit economics. Although it may be too early for like a C stage or Series A company to consider that, but however, our fund's approach is quite practical because we look at business that eventually you need to make money. Otherwise, it doesn't really justify our investment methodology. So unit economics being your CLTV to CAC, and also your margins on different level, that need to justify. We have a set of internal criteria. So I think the business model need to justify that criteria. It doesn't have to show super high margin or super profitability at the early stage, but at least when the business is at scale, we need to see that potential.
Okay. So thanks for sharing that. So I think we'd like to also know, right, how is TNB Aura's portfolio companies doing during this pandemic? And are you guys, exciting news? Are you guys making any exits soon?
Sure. I think there's two questions. I think for the first one, on the fund level, I would say our portfolio are quite resistant to COVID. But if you look at, so overall, if we track the top line metrics, overall our portfolio companies are still growing despite COVID situation, which is a good thing. And if I kind of dig into one level deeper, because I explained like our portfolio is kind of a B2B to B2C, half of them are in B2B and half of them are in B2C, right? So for B2B business, actually we observe is kind of a bit more resilient to COVID situation, because our B2B portfolio tend to be B2B SaaS, so they have more recurring revenues, and they already signed a contract with a long-term contract with their clients. So even their clients got hit, but there's something they still have to spend, and they don't want to break the contract. So that's why they still manage to maintain and grow the revenue. On the other hand, for B2C business, what I observe is for B2C side, we also have business that has omni-channel, basically online and offline channel. For those kind of business, actually the offline business is hit quite badly. And online sales sees growth actually during the COVID period. So for those kind of business model is basically flat. Then for certain sectors, for example, travel and hospitality, we have one portfolio company, and we have seen kind of a almost 90% decline on the top line. But however, luckily that the founder are very experienced and good executor, they quickly adjust the cost base of the company, and they manage to bring the monthly burn down to a very low level. And at the same time, they manage to raise additional funding to last them for another 12 to 15 months. Generally, our portfolio is quite resilient, and also they actually managed to secure additional fundings during this period.
Nice. Any exits?
Oh yeah. To your second question, yes. For exits, we are actually looking. We actually see opportunities for one or two portfolios to they receive offers for potential exits, but I can't disclose too much. But it's still a good thing despite COVID situation. Actually, other than the exit, right? I think I think this is more relevant to our audience today. For startups who want to raise money during this period, I think probably I can like give some advice. The first thing is if you are already into the fundraising process, try to close faster and be open for a smaller risk. Because the time of the money in your bank in your bank is quite important, and the longer you drag, the higher the uncertainty is, right? So if you are in the fundraising process, try to close it faster and maybe a smaller amount, right? I think survival is the most important. And second thing, if you have not started the fundraising process, I think you need to do revise your business plan and cash flow forecast to amid COVID situation. Try to lower your burn, and also try to last for a plan for a longer time before you can reach the next round.
Okay. Do you have any advice for startups on how they should handle their cash right now?
Okay. I think that's also a good question. I think to any startup is really case by case. But I think I can provide some general feedback from our portfolio company. So what we have seen they did that are quite effective. So first thing is you need to cut your expenses, especially marketing and sales, because I think especially your business is like online, offline, or your business requires actually is sitting on the tailwind of the microeconomics. Then probably any marketing, most of the marketing during this period is not effective. So you need to reconsider your marketing budget, your marketing spend, right? Then second thing is you need to, second thing is more quite interesting. So some of our portfolio company, they actually had a plan to kind of put more R&D into internal process and try to automate a lot of stuff, right? Basically to bring to make sure the operation is more efficient and also bring down the cost, right? Maybe thanks to COVID, a lot of them are forced to do that, are forced to accelerate that process, and we actually instantly see the impact from introducing a lot more technology in terms of their internal operations. I think within 2 to 3 months after going into period like in April and May, we already see a big impact on the automations, right? So basically, I think for most of the founders, you need to think about how to basically make your team work smarter and more efficiently. So like per headcount wise, sales people need to be able to close more contract, handle more clients. and your internal operation people, the OKR like need to be higher with any form of help from the technology side. The third thing I would say is on the hiring and firing side. I think it's always a hard decision. Like even as investors, right? When we see our founders, they have to fire or do a salary cut on their employee. It's a very painful process. But what I would recommend is if you have to take some cut, do it, but do it in the good manner. And also for hires, I think for operational level hires, probably you need to think about freeze the hire for the moment. For key hires, actually regardless of what the situations out there, you still need to make key hires. And I believe there are a big talent pool in the market for you to pick. Yeah, so that's I think that's the 3 points I want to share on this point.
Well, the last question I have for you is, so we know TNB, now that you share, right, we know TNB invests a lot in Series B company, right? And I would like to say that there could be a fair share of seed stage startups within our audience. Could you share a little bit of advice with these seed stage startups, right? Is there an opportunity for them to approach TNB Aura for investment opportunities, and perhaps how they should, navigate the post-COVID world?
Oh, sure. I think there's 2 questions as well. On the first question, for seed stage startup, yes, we won't shut the door completely. But however, it will not be an immediate funding opportunity with us. But however, normally what we do is for seed stage company, if we see the business model is interesting, market potential is big, and the team is good, we are open to have chat early on when they are at seed stage. And also, we actually like to give our views and advice on how they should compete in the sector and how they should be prepared for future funding rounds. And we actually, even I think what we did for seed stage founders is we love to have a chat first, then provide our advice, and also kind of setting a bit of expectation on their, I don't like to use the word KPI. I would say North Star metrics for them to closely monitor and track and grow over a period. Then when they are at Series A, it will be the perfect stage for us. And so basically, we love to see seed stage company to approach us, and we also open to have chat with the selected companies. It's just it won't be an immediate funding opportunity from our end. And to your second question is how to navigate post-COVID situation, right? I think still fall back to the fundamentals, because we don't really know how long this COVID will last, and how fast the economy will recover after post-COVID. I think one of the reference we can draw is Vietnam market, because I think they are the earliest country that came out of COVID, and like all the and the economy on the ground is recovering. Like a lot of people are predicting a fast rebound after the COVID. Probably I hold a different view, because I think COVID session probably will be a long tail event and sometimes become a new normal. The case won't be completely go down to zero. So I think the founders need to still fall back to their business plan. They need to be having a few scenarios, like for example, a sharp rebound of the economy. So that's the kind of the best scenario. Then they also need to have a base scenario as a long tail COVID situation going forward. So, and also be very vigilant on looking at their plan and be agile about tweaking the plan, adjusting their strategy going forward. I think agility is one of the things that will give the founders advantage.
Okay. All right, great. So thank you. I think we want to open the session to some Q&A from the audience, right? So I think we got a few. So the first question comes from Zihao Liu. And his question is, what B2B verticals still have opportunities in Southeast Asia?
Okay. I think that's a good question. I think for B2B sectors, right, we are still looking at a lot of artificial intelligence technology. But if you think about artificial intelligence, right, it's quite a broad and big idea. Actually, what I see about artificial intelligence is basically it's a technology and tool that companies can apply to their specific industries. So from my experience in the past, a lot of AI company is going into natural language processing, computer visions, and also fintech space. I see a lot of advantages serving those industries. So I think to look at this part of the business model, right, you need to look at how big is the potential, the size of the potential industry. For example, fintech is a huge industry. So there is a good potential for AI company become sizable and serve the fintech sector. And also another side is I still believe is retail. And also probably security. Like for example, we look at a few cybersecurity platform before, also leveraging on AI platform. But business model wise, I think probably B2B SaaS model is the best pick for B2B models.
Okay. We have another question. This is from Brian Wong. So he said he's asking, how do you view potential investments that compete in the same space as an existing portfolio investment?
Oh, sorry, again?
So how does TNB view a potential investment, right, that is competing with your current portfolio, that is in the same space?
Okay.
Yeah.
That's a very good question. I think we are quite different from guys like SoftBank. Like SoftBank invests into every players in the same sector. We tend to have a different approach. Because we don't want to have a conflict of interest internally. So unfortunately for the guys who are in the same space or direct competition with our portfolio company, actually we will not make investment. But if you are in a similar sector, not in direct competition, yes, we will look at such companies for sure. Like for example, we invested in Propsy in Vienna, which is into PropTech. However, we also look at different models in PropTech in other countries. Because we already, like one of my partners is very experienced in real estate, and also our team has experience in making investment in Propsy. So we actually understand the sector a bit better. That won't stop us looking at such business models. But however, if there's another company doing exactly the same thing as Propsy, unfortunately we won't look at them. I think it's for the benefit for both our fund and also the startup founder.
Okay. Hope that answers your question, Brian Wong. Let's go to the next question. So this is from Jin Lee. So it's, hello, I'm Key from TikTok, a local startup pioneering and innovative approach to data annotation for AI and machine learning, right? And they are raising their seed round and they're targeting a ticket size that is a little on the high end. Their perspective is that they know exactly what they want to do with the investment, and they will grow. They think they'll grow optimally with a funding round of that size. I think they want to hear your thoughts on this, right? Should they be asking for that amount, or should they be asking for less?
Okay.
Yeah. You need me to repeat the question?
No. Actually, it depends before I know the exact figure.
Okay.
But I think the general answer for this is I think this is also related to my my answers in earlier sections about if the founder is in the fundraising process, and also so they should close the round a bit faster with a smaller check. That's an overgeneralized answer. If I dive one level deeper, it really depends on how much interest you have. Let's say for just making an example, if you are raising 1 million for seed round, and you actually have interest ranging from 3 to 5, that means most likely your round will be oversubscribed. So in that case, I think very importantly, you need to secure a lead term sheet first, then gather the rest of the interest into the round. So in that case, you are actually quite comfortable. You don't have to lower your round size. But if you are raising 1 mil and your interest is just probably around 1 mil or above 1 mil, and there's like a 50% probability of closing all of them, then you should still secure a lead term sheet, but however need to consider closing the round with a smaller amount. So in that case, also this also related to like where you want to spend your proceeds for this round. I believe for AI machine learning company, right, you will spend most of the capital into your R&D and the product, right? I think you need to think about the plan a bit longer. So for example, after you spend, if you manage to raise 1 mil, then what kind of milestone you can hit after at the end of the round, and also with maybe less capital, 800K, 500K, what kind of milestone you can achieve. Then so think a step further into the future funding rounds then you can backtrack to today to decide whether you need to lower your funding round or not.
Okay, I think he gave a thumbs up, so good. I hope this answers your question, Keith. So Joe, I think we have a question from a potential investor. I'm not too sure if you're open for investor-related questions.
Yes, of course.
Okay, so I think it goes like this. So I think this came from HB Ui. I think so. The question is, what kind of returns are you giving your investors? What IRR over say 5 years or multiples?
Oh.
If it's that, I think perhaps he or she can reach out to you directly.
Yeah, sure. I think just reach out to me directly.
Okay.
Yeah.
And then one last question from the audience. This is from Scott Treller. Do you have a view on the B2B application of fintech and ML to the broader investment management industry? And they're not robo-advisors.
Sorry again. I didn't catch the first part.
Okay. Do you have a view on B2B applications of fintech and machine learning to the broader investment management industry? And they are not. I think they are not robo-advisors.
They are not robo-advisors. Let me see. Actually, we usually for B2B fintech. I
guess the question is like for fintech and machine, how how do you see this applying to the investment management industry? Or yeah.
If not robo advisories, you need to. Actually, we see quite a few number of startups in this space before. I can't say I have a view on the winning model, but actually I can share some views about the startups we have seen before. Especially, we have seen some AI machine learning companies serving the investment management or fund management industries. Yep. So one of the concern we have is basically the scalability, because there are a lot of startups actually started by serving one big client, and in the end you need to customize your solution a lot to cater this particular client, and make it a bit difficult for you to sell and also integrate with other clients in the market. So that's one of the concerns we had. And second thing is for actually not really robo advisory, but for we have seen startups that's providing AI-based like investment recommendations engines for like mutual funds, for hedge funds. But the thing is, this kind of technology, if you are really good, you should start your fund by yourself, right? And I think the industry is like most of the, for example, hedge fund, right? They have their own internal algorithm, which is proprietary. And if you can't justify that your engine, I mean the results from your engine is better than their internal algorithm, those clients won't use you. But in the another sense is if you can justify that, why not you just start your own hedge fund, right? I think that's the second challenge. I think the third challenge would be if you are doing a widely applicable software for all the major clients. So unfortunately for this industry, the big money comes from the big banks, big FIs. If you are doing a widely applicable application, I haven't seen any startup finding a niche or finding a strong value proposition or pain point that they can solve for all these guys. Because I think each of them are different animal in terms of their internal operation. So you have to find a balance between having a standard product and also have the flexibility to go deeper with what do you call it, the more like anchor client or key client.
Okay. Yeah, we actually have a couple more questions, but I think we're running out of time. Yeah, so we will try our best to answer some of your questions through the article with TNB Aura. I mean, as second choice, please feel free to reach out to Joe. So I think this is close to the end. I just want to give a thank you again to Joe for doing this webinar with us. It's been a highly engaging session. Can you share a little bit how our audience can reach you if they want to reach out to you?
I think for application-wise, you can send the email to our application email box, and which is listed on our website as well. For any other stuff, you can reach me directly on LinkedIn. That would be the best channel.
Okay. So thank you again for the session. Again, I just want to share with the audience that, E27, we have over 250 investors like Joe and others who are looking to connect with early stage, well, not early TNB because you guys are Series A. We have other VCs that are looking to connect with Series A, seed stage, tech startups for investment bridging. Yeah, from pre-seed to Series B, right? So please check out our membership program and feel free to connect with our team to know more. And I'm supposed to share next week, so webinar. Okay, so next week, again, yet another Meet the VC series. We'll be chatting with Ms. Carmen Yuan from Vertex Ventures. Please make sure to register, an RSVP if you'd like to join. We'll send out a short survey after the webinar. Can you take your time to let us know what are the other topics you wish to hear about, and we can improve on the webinar. In the meanwhile, here are some of the handles that you can connect with us on D27 on Twitter, Facebook, and LinkedIn. And yes, thank you so much for joining the webinar. It's been a pleasure having you all. Again, thank you to Joe and TNB Aura for agreeing to do this. And yeah, please have a good rest of your day. Thank you, everybody.
Okay, thanks.
All right, thanks, Joe. Thanks for doing this.
Yeah, thanks, Nick. Bye.